Everyone back to the Green Finance and Investment Forum. I'd like to welcome everyone to this session on unlocking finance and scaling up capital for India's clean energy ambitions. My name is Cecilia Tam, and I lead the OECD's Clean Energy Finance and Investment Mobilization Program. We are delighted to focus on India's program at this year's Green Finance and Investment Forum. And we've had the pleasure to work closely with our colleagues from India to support their clean energy transition goals, most recently on a clean energy finance and investment roadmap that will be released later this month. This roadmap contributes to three important targets for India, namely reducing energy intensity by 45% compared to 2005 levels, achieving the 37 gigawatts of offshore wind capacity auctioned by 2031, and 5 million tons of green hydrogen development. The roadmap recommendations, developed in close cooperation with stakeholders from government, industry, and financial sector, identifies financing solutions to mobilize capital for clean energy investments. A couple of housekeeping remarks. The session will be conducted in English and will be held using Zoom and live streamed via the Forum online platform. I encourage speakers to mute yourself except when invited to speak, to turn your video on, and to raise your hand whenever you wish to intervene. For our session today, we have invited a distinguished group of experts to share their insights on unlocking finance and scaling up capital for India's clean energy transition. I'm pleased to introduce our speakers and panelists for this session. On our panel today will be Shri Abhay Bakri, Director General from the Bureau of Energy Efficiency of India, Mani Khurana, Senior Energy Specialist at the World Bank, Jean Monson, Director, Project Finance and ESG Finance for Asia Pacific Asian Investment Bank Division at MUFG. We also are pleased to have opening remarks from His Excellency Freddy Svane, Ambassador of Denmark to India, and a special keynote from Shamara Wikramanayake, CEO of Macquarie Group. And to start our session today, I would like to welcome His Excellency Ambassador Svane to provide brief opening remarks and share with us some of the initiatives of Denmark's collaboration with India. Ambassador, the floor is yours.
Thank you very much. Namaste. I'm extremely happy and pleased to talk as the greenest ambassador ever, having served in India. And let there be no doubt that Denmark, we are extremely supportive of India's green transition. However, we can't do it alone. So we have to unlock a lot of mechanisms, and therefore we are extremely pleased that we have a strong collaboration with the Indian partners, but also OECD. And it's very, very important that we help India, inspire India to do the green transition. And therefore, all the work that we have done, we have the Green Strategic Partnership on our side. We have the FEMI report that showed that it's feasible, affordable, really to let's say, introduce offshore wind in India and so forth. It's very, very important. And I think later in the year, in November, we'll also have a conference down in Chennai. But having said that, we are, as I said, extremely pleased and happy with the support that OECD has given to India in India's trajectory towards a greener, more sustainable society, and also based on the very, very important commitments that Honorable Prime Minister of India, Narendra Modi, undertook back in Glasgow. And of course, we still have high hopes for COP27 and what comes beyond that. The findings of the report gives really important and significant insights for India and how to progress in the future as to the green transformation. It's so important. And the unlocking of finance is really, really important. Without finance in place, we can't do much. And therefore, it's so important that all good forces are coming together in order to unlock the financial mechanism in such a way that we can help and support India. And by supporting India, And beyond, then I think we will be able to deliver not only on the climate-related challenges, but also the SDGs. So important. We are very happy about the roadmap that you have entered into, because it gives us a deep dive into the solutions for financing the needed energy transformation. I think it's important that you are focusing on the three major fields of interest, which is, of course, energy efficiency. It's a low-hanging fruit. Not too many people are talking about it, but basically it's a low-hanging fruit, and much can be achieved without huge investments. And then, of course, offshore wind and green hydrogen. Therefore, it's really recommended reading that this way can develop. We are also extremely happy that there was a collaboration between OECD and our Danish colleagues for the Indo-Danish financial tool that can be a model for the costing and the viability gap funding. We know, for instance, to introduce offshore wind in India, it will take a lot of money, and therefore viability gap funding is of the essence if the developer will not be able to bear all the financial costs by themselves. We are extremely happy that a tender will be out very soon for offshore, both for Tamil Nadu and perhaps a little bit later for Gujarat. That's the only way forward, and I think by combining all our efforts, practices, and experiences, we'll be able really to take things forward. And really, financing is the most important part here. So we need really to work combined in order to secure that we can de-risk the financial part in such a way that capital can flow in to India. But also, if we manage with India, then we will set a standard for the rest of the world. An energy crisis looming as it is these days will require a collaboration and cooperation beyond what we have seen so far. And it seems without any doubt that renewables will be the way forward. And therefore, we have to do whatever we can to secure that we have this perspective in place. And therefore, the collaboration between OECD, Indian authorities, and other stakeholders, and with the input from your side, is so important. And in that context, I would very much be looking forward to the conference that is going to happen in Chennai in late November, 23rd of November in Chennai. I think that would give us a special opportunity really to dig into this and deep dive into all the details. There is no limits as to what we can do, but there's a time factor. We have to do it fast and speedily. And therefore, we have to really to work together. And I hope today's conference will give us some more directions and will help us bringing us all closer to the end goal, which is to secure that all the green solutions will come to the benefit of India. So with these words, I congratulate all of you, and I also wish you a happy discussion and a dialogue that will turn us into being good, great, and green, because that's the need of the hour. So Dhanyavad, thank you very much, and good luck.
Thank you very much, Ambassador, for these remarks, and a special thanks for making it possible for the OECD to work with India under the Clean Energy Finance and Investment Mobilization Program that has been generously financed by Denmark. Next, we have a keynote from Shara Wickramanayake, CEO of Macquarie Group, who will share with us some of her thoughts on what is needed to scale up capital mobilization for clean energy in India.
Thank you to the OECD for hosting this important event, and I'm sorry I couldn't join you in person this time around, but I'm delighted to get this opportunity to share my perspective on India's energy transition and some of the important work now happening on the ground. In August, Prime Minister Modi set the bold ambition of reaching energy self-reliance by 2047. And this was an important signal that builds on the many successes of India's energy transition to date. After a slowdown caused by the COVID-19 pandemic, The success of India's approach is once again visible with a strong recovery in new wind and solar installations, which are expected to set a record of 14 gigawatts in 2022. India's trailblazing use of clean energy auctions is enabling this high level of activity and is delivering some of the cheapest zero-carbon electricity globally. This success is helping an ecosystem of homegrown and international project developers to thrive. Still, investors in India, as in many other places, are now dealing with significant challenges, including high inflation, higher financing costs, and currency fluctuations. And meeting India's extremely ambitious climate and energy transition goals in this challenging environment will require all of us stakeholders to redouble our efforts. So in that spirit, at the end of last year, Macquarie helped the launch of the Climate Finance Leadership Initiative, or CFLI, country pilot in India, which I have the honour to chair alongside Natarajan Chandrasekaran, chairman of Tata Sons. This initiative brings together 9 leading domestic and international private sector institutions, and all of these private financial institutions are committed to helping to unlock and mobilise private capital through policy engagement and innovative financing vehicles. We're focused on areas of the transition where progress has been more difficult. Through this first phase, our teams have been working on catalytic initiatives spanning e-mobility, clean energy integration, hydrogen, and wastewater recycling. Achieving meaningful scale in these sectors typically requires private and public stakeholders to work hand in hand to de-risk the investment environment, especially in emerging markets. This is the principle behind our recently announced partnership with the Green Climate Finance Fund, where we're working to develop a blended finance platform that aims to deliver $1.5 billion of investment to accelerate the adoption of electric vehicles in India. Transportation in India already accounts for 13% of all emissions and is a major contributor to urban air pollution. And this situation will only worsen if switching to an EV does not rapidly become more affordable and practical for India's businesses and the wider population. Now, low-cost clean electricity is helping the competitiveness of EVs, and our platform will start by focusing on the segments that are most ready for electrification, including buses and commercial fleets. But the EV sector in India remains at an early stage, and this first of its kind equity commitment of the GCF will play a pivotal role in helping us overcome hurdles and crowd in more capital. I hope that this first example of a large-scale blended finance vehicle in e-mobility will be reproduced in more markets and in support of other climate solutions that need to be scaled rapidly in India and elsewhere. India is a country that is emblematic of many of the challenges and opportunities of the transition to a low-carbon economy, and on a scale that makes its successes important precedents for other emerging markets and developing economies to follow. So we look forward to working together with partners to help India achieve its goals. Thank you.
All right, now we're going to shift to our panel discussion. And before beginning, I'd like to just remind our panelists to keep their responses brief, ideally under 3 minutes, so that we'll have time for 2 rounds of questions to each panel member before taking questions from our audience. And I'd like to remind our audience that you will have the opportunity to submit your questions through the InWink system, and we will turn to those after a few rounds of questions directly to our panelists. To start, I'd like to start with Dr. Abhay Bakre, Director General for the Bureau of Energy Efficiency. The Bureau of Energy Efficiency has set up a facilitation center for encouraging and scaling up energy efficiency investments in the country. Which technologies have been identified as priorities, and how will the facilitation center help financial institutions identify viable energy efficiency projects? Dr. Bakre?
Yeah, thank you, Cecilia. And first of all, let me compliment OECD and NRDC for having arranged this panel discussion. Yes, as all of you know that requirement of financing support for energy efficiency projects is a very key aspect, and Bureau has been working on that. We are trying for different models. Now, since different sectors are having a different kind of needs for the financing, so we have set up a facilitation center. We have identified almost more than 75 energy efficient list of technology. These technologies are basically the emerging technologies. Primarily, they are for industry sector, focusing on SMEs, but they some of them are cross-sectoral also. The purpose of this facilitation center is to not only get this technology list, so it can guide the industry or the other stakeholders to prepare their project report and applications. But at the same time, this facilitation center will handhold them to prepare their overall project proposal and also connect with the financial institutions. So this center will be forwarding their application. We are conducting workshops, seeking application. There is a application portal, and then we are forwarding it to different financial institutions for further arranging the appraisal and the loans.
Thank you very much. My next question is to Manny Khurana at the World Bank, and also to Jean Monson. Monson, which innovative financing products and vehicles exist or could be designed to achieve India's NDC targets? Please go ahead.
Thank you so much. A very good evening to all of you, and thank you for having me here on this panel. It's actually the most important question now that the targets have been set and we have to achieve the net zero target by 2070, the question is, where will the money come from? We've done a bit of modeling, and which shows that you basically would need around $1.9 trillion by 2070 to go on the accelerated decarbonization pathway, which is achieving net zero by 2070. Private players will play a very important role as we move forward in India. But I think especially in the new technologies, where the market, it still has to be proved and the market is not really convinced about it, the financial institutions are not lending to it, that is where I think, where the money has to really come in. Now, what we've really seen, and from my experience, when you enter a new market, the initial time you need the grants. You need money to do that. But what really helps is once the market is set, then guarantees play a very important role. So it could be guaranteeing on the payment side, or it could be just guaranteeing the bank who's ready to lend because they're not sure about the credit worthiness of the people who are taking the loan. So I think as we see our transition evolve in India, for every technology, an assessment would need to be done, and different kind of products would need to be looked at. Like to take the example, we are looking at a solar rooftop for MSMEs. Now, solar rooftop, we all know, has taken off for CNI, that the credit worthiness of the MSMEs is still a question when the different financial institutions have to lend to them. Therefore, now we are looking at a guarantee mechanism so that you put up a risk-sharing facility so that people lend to MSMEs. And once, there's a track record, there's experience in the sector, the money, the commercial finance will flow in. So I think the main thing where we will be using a lot of, the bilaterals, multilaterals, and grant money would all be going into preparing the market so that the private sector can come in later. That's it from me.
Thank you very much, Manny. Jean, would you like to also jump in here on this question to perhaps share some of MUFG's experience?
Yes. Hi, Cecilia. First of all, thank you to the OECD for organizing this conference. And thank you for inviting MUFG. And perhaps just a quick introduction for those of you who aren't familiar with MUFG. We're a global financial institution and one of the largest financiers of clean energy. So I think the role that we play in the energy transition really takes two forms. In the first bucket, it is deploying bank capital, and that is acting as a lender. This happens primarily on a greenfield basis in terms of project financing. And on the greenfield basis, we financed globally over 130 gigawatts of renewable projects, committing over $3 billion to renewables of our own balance sheet. And that's something that that's the first thing that we do. And the second thing that we do as far as mobilizing of capital goes is that we're also an arranger. So we mobilize capital from institutional investors in the capital markets into projects as well. And I think particularly India is an area and a country in which we are very focused on and very excited about. Its growth of renewables has been simply phenomenal. And where it is today, I think we need to give a lot of credit to the development of 165 gigawatts of renewables, including large hydro as it stands today. But obviously, there's a lot more financing to happen before we hit 500 gigawatts. And the structures that we have seen coming into play to finance the bulk of these renewables actually also take two forms. I think the first form in the bank capital category, it's a combination, and it's actually quite evenly split between domestic financing, domestic capital, and foreign capital. So foreign lenders like myself in the form of something called an external commercial borrowing, so ECB. And then the second bucket, and which is in the capital market. So what we are seeing is that in the first bucket, that's where the financing of renewables on a greenfield basis happens, and in the second bucket, that's mostly saved for when the projects are constructed and they're operational, and the construction risk has really the projects have de-risked, and that's when they start to be refinanced into the capital markets. And India has been an example of being extremely successful in doing so, and it's created a bit of a playbook and a structure that we think can be again recycled as we go across into the new sectors as well. I think just on the topic of how we can scale up and unlock new pools of capital, that's probably a couple of ways to do that. One is to scale up the financings, obviously, and in order to do that, you can sort of have projects which are financed on a portfolio basis, in groups of projects together. That's something that can happen quicker. We also see it as really efficient for bank capital to be recycled into the capital markets with institutional investors. And as more and more of the institutional investor base gets familiar with the credit and the India story, what we're seeing is that they're comfortable in actually coming into the life cycle of the financing a little bit earlier. And that's something that is really exciting, because in that situation, you would be mobilizing capital, more capital, and you'll be mobilizing it faster and sooner and quicker, which would go some way to hitting our 500 gigawatt target. Thanks.
Thank you very much, Jean, for those remarks. Would you like to add anything in terms of additional regulations or policies that you would like to see the government of India implement that would make it easier for you to mobilize more private capital, either in greenfield projects or in recycling of capital and through different capital market instruments?
Thanks, Cecilia. So I think that's a great question. Right. And from a financier's perspective, I think we've seen that government policy has been an extremely powerful tool in catalyzing capital into those sectors that there is intention to do so. And what I mean by that is, and I can give some examples of this, I think the success in renewables is certainly by design and not by accident. There's been plenty of structures that have been put in place in an ecosystem that gives lenders and international financiers like ourselves comfort around the bankability of the PPA, the structures, the status of the renewables on an offtake basis, like a must-run status, and also the state policies. The state policies have been very effective in stimulating that demand. So I think just to mention a couple of these state policies in Gujarat, the wind solar hybrid policy, for example, in 2018, really caused an uptick in wind solar hybrids. And similarly, places like Karnataka, where we saw CNI, the boom in 2018, that was again because of certain policies deliberately targeted at increasing the capacity in those states. So I think it brings us back to what policies we can see being implemented here, especially for the new sectors. And I think broadly they fall within two buckets. One is supply side policies, and two is demand side policies. From a supply side policy, that the whole purpose would be to drive costs down and to make the new technologies, once mature, as cheap as possible. So certain tools like waiver of transmission charges, waivers of ISTS charges, that's been used over and over again through various sectors, through renewables, through battery. And again, that's been very successful at stimulating the growth of these technologies. And something like the production-linked incentive for solar and batteries, that's something that as well that could be applied across, that we're seeing in energy efficiency, and also in something like electrolyzers in hydrogen. And that's all targeted, obviously, at lowering costs from a supply side. From a demand side, what the government would be doing is increasing demand, and that would involve things like mandates. So involve things like blending of hydrogen into existing ammonia, urea, and refinery, which is similar to what has been done across buildings and cars, which is to say that you have to hit a certain level or cap a certain level of your emissions, and obviously combine all of these with taxes, right? So carbon taxes, carbon pricing, making what's dirty more expensive. So it's really three-pronged. One is to bring costs down the supply side, making it cheaper. Two is to increase demand, so there's certainty of offtake. And three, obviously, tax the dirty. So in combination, these sort of tools and levers, we have seen the government very effectively use in the renewable space, which can be translated to the new technologies to influence supply and demand.
Thank you very much, Jean, for highlighting some of these policy and regulatory interventions that can really help attract more private capital into the market. I'd like to now go back to Dr. Bakre. What is the role of international cooperation to support the rollout of energy efficiency projects in India?
Yeah, so Bureau, as you are aware, that it's the central nodal agency on behalf of Government of India. Although we are set up through a legislature, that is Energy Conservation Act, one of the, in fact, two key aspects which are relevant for today's discussion are very clearly mandated in the Act itself. One thing, to create innovative business models and financing mechanisms. So that is one clear mandate given to Bureau in the legislature. And the second one is also to establish international cooperation activities. Now, if we combine these two mandates given to Bureau, we have been working with a lot of stakeholders, including some of them which are multilateral banks, some of them are bilateral working groups, some of them are agreements, And at the same time, there are other organizations, IOs, UN organizations, etc. Now, on one hand, we are taking their experience, global experience, sharing our experience within country, but actually trying to get what is happening in terms of technology. So technology is one area where we try to see how the technologies are progressing, which are the emerging one, what policies are kind of more effective in deploying such technologies, which are the key sectors where such technologies are very ready to be absorbed, etc. The second thing and most important thing where we are trying and we believe we need to go a long way is mobilizing finance. So the sectoral need in India have been different. The targets are different. We are a growing economy, but we have already chosen a very clear energy efficiency and a low carbon trajectory. So our targets are set by 2030 or even by 2047, and finally net zero by 2070. So in that regard, we have identified which are the key sectors where the technologies are needed and how we can deploy. The second aspect is how to get the financial support. What kind of incentives we can do. We have tried the regulatory measures, certain areas like PAT scheme, industries, large industries, we have tried with the regulatory measures. But in most of the cases, even the incentives, the kind of promotional policies have also done a lot, especially in the appliances side or SME sector, the persuasion, the technology dissemination, some kind of demonstration has really worked. So what we need from international cooperation is that, one, how can we actually do some kind of a pilots or demonstration and come out with a strategy for scaling up. And the second thing, most important, as I mentioned, what kind of different financing models are available? How can we actually mobilize finance? And in particular, the international finance. We can call it any kind of climate finance or green finance. But how do our consumers, our stakeholders, our industry, who are very keen to meet the target, who are very keen to deploy the emerging technologies, because we are a growing economy. So how do we get the finance at the very, very low cost? So what is the low cost finance available and how can we best make them available alongside the technologies which are available anywhere in the world, so that our industries and other stakeholders, they can benefit and get the policies and trajectory met as set by the government of India for the international commitment. Yeah.
Thank you very much, Dr. Bakr. And I think some very good questions there that I hope our fellow panel members might want to jump in here as well to respond to. But before that, perhaps I'd like to now turn back to Mani to ask a question about blended finance. What role can blended finance play to support clean energy development in India? And how can you design blended finance instruments to best contribute to energy efficiency, offshore wind, and green hydrogen developments in India?
Thank you, Cecilia. It's an excellent question. I'll first respond to the first part of the question about the blended finance and where is it required. I think blended finance now more than ever is required, and more of it. Why so? And this is actually going back to the first, the other panelist, what they said. Financing is never the only issue when it comes to facilitating a market for a new technology. There's an entire ecosystem which has to be created around it. To give you an example, when I was discussing with a lot of financial institutions about battery storage. So the first question was, what is battery storage as a technology? So it's about information. It's about how, if a proposal of battery storage for financing comes to any of the financial institution, how would they actually evaluate the proposal? You know, what is the charge? They do not know the technical terms. And that is, so the first thing is building the ecosystem so that the financing can reach the right people. Now, the ecosystem includes the training of all the relevant stakeholders, sharing all the global knowledge that already exists so you do not reinvent the wheel. Thirdly, on the policy and regulatory, which become ever more important because obviously the cost will rise if there's any kind of gray area. Things have to be clearer and you will get a lower price for your technology. And I think the most important, and which we saw in terms of solar rooftop and which I'm seeing in terms of battery storage, is consumer awareness. It is very important because you read newspapers, you read about fire, but why did those fires take place? There was a gap somewhere which has to be met. So, the standards have to be put in place, the safety norms have to be put in place. We are talking about a new technology which hasn't happened earlier. So you have to set up the entire ecosystem around it so that it then takes off with the help of financing. So financing is crucial, but if you do not put that blended finance, that amount of grant or concessional financing inside to make sure that the ecosystem is created, alone financing will not be able to really matter or take the new technology forward. On your second question, more and more I see about, and frankly, the energy sector has changed a lot in the last 10 years. We have new technologies coming up. Everyone's learning about it. What is more important is, and I think globally we realize that, I would say there needs to be a pot of money. If we come together and we make a global fund for maybe, let's take the example of offshore wind, right? You put a global fund together where you have, but obviously every project will be different. So that will be financed in different ratios of how much loan needs to be done, how much guarantee needs to be done, how much grant needs to be put in it. So it will be project wise because one size cannot fit all. But if we actually start putting funds for the new technology together and, so every country knows that this much of grant is available, concessional financing or any other funds are available, that will really help because they'll know whom to reach out to. As Mr. Bakre said, financing is required, but where do you get that financing is the question, and the rate at which you get that financing, because that becomes even more important right now. So I think any kind of facility which has these clear different options, but it has to be done project wise. You cannot have one size fits all. That will not work across countries. It will not work across technologies or even across states in India. It has to be different. Thank you.
Thank you very much, Mani, for those responses, and really important the point you made around creating the right types of ecosystems to allow financing to come forward and projects to be developed. I wanted to see with you, Jean, if there was anything else you might want to add in terms of responding to some of Dr. Bakre's remarks about how to lower the costs of financing and getting access to more finance.
Hi, Cecilia. I think on the cost front, it's really all about finding price parity. And this is how we saw renewables become such a success, really. If you look back 10 years, the LCOE levels were 10 times higher. And solar today, the cost of solar today in India is the cheapest in the world, between $30, $35 per megawatt hour. And that in itself is an incentive for developers and for consumers and the entire ecosystem to shift towards renewables over fossil fuel. It's a cost-driven decision at the end of the day. It's pure economics. And so when you look at it in the new technologies, the similar situation or similar formula could apply, but India has this advantage of a great starting point with cheap renewables, right? The low-cost renewables. So take, for instance, hydrogen. The bulk of the cost of hydrogen is going to come from the cost of renewables and the cost of electrolyzers. And if you are producing the lowest cost of renewables, that already puts your costs down at a more competitive level than another country that's producing hydrogen, that you're looking to produce hydrogen in. And I think it was an international, renewable energy study which mentioned that to the extent that we could get the cost of renewable energy or solar down to $20 per kilowatt hour, and you could drive the cost of electrolyzers down by 80%, that would actually lower the cost of hydrogen production by 80% as well. So this actually demonstrates that in the sense that it's a cost game as far as development of new technologies go, in addition to obviously technologies being mature. And one of the greatest stimulants is going to be, how do we get to cost parity? Because once you do get to cost parity, then really it becomes an economic decision, in that the laws of economics will prevail. You'll choose something that is both good, green, and doesn't cost more than the alternative option. And so given that choice between say renewables and fossil fuel today, because the fact that solar and wind is actually cheaper than renewables, and that's driving all of the investment and all of the decision and development into renewables. So I think cost is an incredibly important factor, which goes back to the point about subsidies, incentives, and ensuring that the entire sort of ecosystem is geared towards lowering those costs. And that can be done in, for example, domestic manufacturing, where if the costs of making electrolyzers or solar panels are brought down as low as possible, you would be creating an advantage in developing this new technology.
Thank you very much. I'd like to remind our audience that you can submit questions to our esteemed panelists through the in-wind function. So we have started receiving some questions, so please continue to submit these to the system. So I'm going to just read out some of the questions that we have received so far. And I invite the panelists to raise their hand if they would like to respond to the questions that have been put forward to our esteemed panelists. First question is the Indian solar and onshore wind market mature enough to attract and sustain completely on market-based investments and financing? If yes, does it enable to channel more incentives and subsidies to new subsectors such as offshore wind and green hydrogen? Would any of the panel members like to react to that, to respond to that question? Many?
Sorry, your voice went, Cecilia. Could you repeat the question once?
Yes, the question is the Indian solar and onshore wind market mature enough to attract and sustain completely on market-based investments and financing? And if your opinion is yes, does it then allow more channeling of incentives and subsidies to new subsectors or new technologies such as offshore wind and green hydrogen?
I agree completely. I think, the initial part of solar was given assistance, and so was wind. But I think now they're cost competitive, they're reached price parity, and we need to give that support to the new technologies which are coming in. We should leave these to the commercial finance. I agree.
Excellent. Thanks very much. Another question for the panel members. What enabling solutions and financing instruments can foster the development of resilient supply chains for low carbon technologies? I think, Jean, you alluded to this in your last intervention about the need to look at domestic production opportunities. I don't know if any of the panel members want to respond, or Jean, if you would like to elaborate a little bit on these issues of supply chains.
Hi, Cecilia, it's Jean. Just a couple of words from me, and then I'll let some of the others jump in. But just on resilience of supply chain, and you and I talked about this a couple of days ago, is that again, I think a really good example of where India has demonstrated this is something like the BCD, the basic customs duty around solar, where the 25% and 40% solar modules and cells sort of tax that kicked in has been actually, it's funny because it's actually a stamp duty, so that's obviously a tax, but at the same time, what's happened is that it's become a stimulant for the domestic manufacturing of solar, the solar supply chain, in India, and that in itself is something that can be sort of transported and replicated into the new sectors. And in particular, I think I mentioned electrolyzers. It can obviously happen. I think that there is also opportunity for wind although it's a little bit more nascent, and also batteries as well. And this is something I think that is tracking what is happening globally. Globally, if you look at the US and what's happening with the Inflation Reduction Act, there are also very similar sort of stimulants around increasing or strengthening the supply chain and creating a vertically integrated supply chain, both for the purposes of energy security and independence. So, ranging from again solar, but also battery for cars. So all of that I think is very thematic at the moment, simply because we're seeing some sort of the concerns of energy security are really playing out, and there is a drive and there is a theme to increase resiliency of value chains by harnessing it as early as possible, maybe right down to the raw materials and commodities. Right, even for solar, you could do that. If you could talk about that all the way down to polysilicon, for instance, the actual raw materials. For wind, you could do that. Across the entire. If you break out the components, the sort of different pieces of it, the plastic resin, the aluminum, cement, and so on. So that's certainly happening.
Thanks very much, and great opportunities, I think, also for India to develop its economy and building that local production capacity as well, that will help globally reduce, I think, technology costs. So we have another question from our audience. This one is for Dr. Bakre. What technologies sectors will be covered in the facilitation center, and will the center also help to build and document a track record of technology and commercial performance? Dr. Bakre?
Yes, thank you. So list of technologies, it's a long list. So it's available on the Facility Center website and also available on the BEAMS website. So primarily these are focusing on energy efficiency, but also some kind of mix of renewable, etc. But they are primarily the key technologies which we are envisaging based on our initial mapping of different sectors through energy audits and etc. And also some of the emerging technologies which are available. So this list, as we have only started this facility sector about 3-4 months back. So it will be evolving, and we'll try to cover more and more sectors, and depending on the need, etc. The second part, whether these the performance and other evaluation of these technology or tracking the record, that as of now we have not envisaged. But definitely, so that's not part of the facility sector as such. But we will definitely keep track in terms of our own assessment, whether what kind of technologies have been deployed, whether they are beneficial, because we will try to make sure that those are further replicated. Because financing is not only required for early demonstration, but at the same time, the key aspect is the financing is required for scaling up, and more we do the demand aggregation, more and more there is a scaling up. the deployment gets faster because of not only the confidence in the user, at the same time the cost of technology also tend to lower, because any new technology is initially having higher cost, but more and more it is getting deployed, the technology gets, and the initial problems of such technologies, its success percentage, those are all the initial parameters which are always there to be analyzed and useful for further scaling up. Yeah. Thank you.
Thank you very much. Another question from our audience.
Sorry.
How can OECD and other multilateral organizations help India not only to source finance for clean energy, but also to gain access to technology? I don't know if any of my fellow panel members would like to answer this. Maybe I could ask Manny to respond from the World Bank's perspective of any work you may be doing that helps countries, and in particularly India, gain access to technology.
Thank you. It's a very good question. So one aspect is the financing. The other aspect, when it comes to technology, I think what any multilateral or bilateral tries to do is the knowledge exchange. We actually think, at least World Bank thinks of themselves as a knowledge bank. It's all about, so there are twinning arrangements, there are study tours, so that you see the technology. There's a twinning arrangement with an entity which is already using the technology, so you can learn. So, you can have an exchange of people, and visits can be done. So that is something which is very much possible. So if it's being done around the world somewhere and experience is there, instead of reinventing the wheel, the aim of the first initial engagement that we always do is to learn from the global best practices and then see how it has to be tailor-made for India. So that is something which is very important in any aspect of work that we do.
Thank you very much. And I think, the question was also, I think, targeted to OECD. I would have a very similar response in the sense that OECD is an organization. One of our strengths is in our convening and the setting up of forums that really facilitate the sharing of good and best practices. And this also includes providing knowledge around which are the technologies that we need for achieving energy transition or climate targets. And also sharing this information with our different key partner countries to really try to raise awareness and increase market access to the most advanced technologies that are being used around the world, identifying where we're seeing technologies perhaps not entering the market, and working with stakeholders on the ground, other development partners, the multilaterals, to work towards how to increase and make these new technologies available. There's also a number of international fora that facilitate and focus on broadening access to different technologies. Our time is running up on this session. I'd now like to invite our partner in the Clean Energy Finance and Investment Roadmap, Poonam Sandhu, to say a few words and some of the insights from the roadmap process. Poonam, the floor is yours.
Thanks, Cecilia. And hello to everyone who's listening in. I'm Poonam Sandhu from the Natural Resources Defense Council, connecting today from New Delhi in India. NRDC and OECD CEFIM program have partnered to develop this clean energy finance and investment roadmap for India. And this includes solutions for key clean energy sectors that require tailored support to unlock investments. The development of this roadmap was steered at a high level by a committee comprising representatives of the government of India. And the steering committee narrowed down the focus of the roadmap to the financing needs for energy efficiency in MSMEs and the emerging or new technology sectors of green hydrogen and offshore wind. So these are new RE sectors are expected to play a crucial role in optimizing the RE mix and for achieving India's RE targets. We estimate in this roadmap that about 100 billion of investments will be needed for the 37 gigawatts of offshore wind and 5 million tons of green hydrogen that India plans to achieve by 2030. And such magnitudes of financing need a robust assessment of financing sources, strategies for efficient use of public funds to crowd in private capital. And our task was to focus on these elements of financing. Energy efficiency, likewise, is critical for attainment of our Paris commitments on energy, on emission intensity. And the steering committee advised focus on financing solutions for energy efficiency upgrades, particularly in MSMEs, as they often cite the lack of financing as the reason for not being able to implement energy efficiency measures. Our findings and analysis have been documented in the soon to be released Clean Energy Finance and Investment Roadmap report. And this roadmap will include financing solutions and investment vehicles that can help bring in new investors, attract international capital at scale. And this entire process in developing the roadmap has been stakeholder driven, with over 500 consultations over the past 18 months. We're quite content that the challenges and opportunities highlighted in the roadmap and the various policy and financing solutions recommended are really very relevant and appropriate for today. Of the various solutions that have been recommended, the steering committee advised a deeper dive into two specific innovative solutions: an energy saving insurance scheme and a blended finance facility. Accordingly, the roadmap also includes concept notes for highlighting key elements for implementation of these solutions. Energy insurance, savings insurance, as you may know, can essentially create trust among investing firms and lenders that eventual savings on energy bills will more than compensate the higher upfront investments required to install energy efficient technologies instead of conventional ones. And blended finance structures, as we have heard from Macquarie and the World Bank today, can be important for highly capital intensive and the emerging or the new technology sectors like electric mobility, offshore wind, and green hydrogen to get established or to, just take off. Blended finance discussions are not new in India, and we are building on concepts that are already discussed, such as the green window that was developed on the principles of green banking. And it was proposed by the Indian Renewable Energy Development Agency in 2019. So innovative financial instruments can be structured with the support of concessional public funding that can then de-risk and attract private financing and multiples to these sectors. So indeed, hearing that of Macquarie's plans for a blended finance platform in India for electric mobility, it reinforces our recommendations for the need for sectorally focused blended finance platforms. This brief summary of the roadmap, I hope, will impress you to read the very comprehensive roadmap report. Let me now end with a word of thanks to all the project partners. It was a privilege to be able to work with many Government of India ministries on this project, in particular the Ministry of New and Renewable Energy, the Ministry of Power through the Bureau of Energy Efficiency, who so ably steered the project. And thanks also to OECD's CEFM team, in particular Cecilia, John, who previously was working on the India project, Joseph and Chetna, for giving NRDC the opportunity to partner on this very, very timely and important project. So with that, I will now hand over to Cecilia for a wrap up of the session and next steps in the India program.
Thank you very much, Poonam, and big thanks to you and your team for the excellent collaboration on the roadmap, and to our fellow speakers here, many of which have also been quite instrumental in providing us inputs and guidance on the roadmap recommendations that are being developed. And we look forward to continue to working with our different project partners as we move forward to implement some of the areas that the government has asked us to continue with, that Poonam has highlighted in her remarks. I'd like to thank all of our panelists for joining the discussion today and for all of their excellent inputs and responding to our audience's questions as well. I'd like to thank our audience for submitting their questions and taking the time to join our discussion today. I want to mention that the recording will be available for anyone who may have missed the session, or if you'd like to share it with other colleagues, please feel free to let them know that you can watch all of the sessions for the forum through the platform link. And with that, I'd like to thank all of you and remind participants for the forum that we'll be taking a 30-minute break right now, but we will be back in half an hour with additional panel sessions. Thank you very much, everyone, and thank you, fellow speakers and panel members. Have a great day.
Thank you.
Bye.